Hello everyone, and welcome to a new episode of World Economics, the video blog that we have with the Fundación Rafael del Pino, the Rafael del Pino Foundation. One of the things that everybody's talking about these days is the coronavirus epidemic and the impact on the global economy. To start with, what we have to do is to remember those that have died because of the epidemic, and furthermore, our thoughts are with their families and with everyone that has been infected. But let's talk about the economic impact, which is what we talk about here. When we look at the economic impact, there are two elements that we need to be aware of. First, we started the year 2020 with an extremely optimistic perception of not just the V-shaped recovery of the global economy, but a rapid solution of the coronavirus epidemic and an almost negligible impact on the Chinese and global economy that would show some signals of impact in the first quarter that would be immediately offset and actually even further delivering further and more improved growth in the second and third quarter. This obviously was excessively optimistic, and therein lies the reason why markets are reacting so aggressively. Everybody, or at least the vast majority of market participants and experts, were too optimistic and at the same time relying fundamentally on very aggressive monetary policies to disguise the risks to the global economy. What we need to understand is that in that period before the outbreak, the reality was that we were already seeing very evident signals of global economic slowdown, particularly in those economies that many market participants and economists expected to deliver stronger growth in 2020. The recovery of Germany did not happen. The Japanese economy tanked in the fourth quarter after a sales tax increase, therefore nothing to do with the coronavirus and before anything happened. Also in France, also in Italy, but furthermore in Mexico, in Brazil, in India, many economies were starting to show a slowdown that had nothing to do with this. Once the outbreak happened, what we saw was first an overly optimistic reaction, that is, that there would be a very rapid solution, that China would resume its high level of growth and imports in a couple of months, and that the whole thing would be contained because, and I remember that somebody actually wrote that there would be a vaccine in the market very, very quickly. That is not going to be the case. From there, disappointment leads to excess of pessimism. And the excess of pessimism is leading many to think that this might be a massive crisis that generates a global recession, etc. What do we know? What we know is history. The first thing that we know is that in previous epidemics, what we have seen is that the period of time that those epidemics last is shorter, that the number of casualties is contained quite quickly, and that a solution is achieved in a period that is absolutely short compared to history, obviously, not compared to market expectations, but compared to history. We're talking about the possibility of getting a vaccine between 5 to 9 months. That is absolutely record speed. More importantly, what we also know is that the economy tends to recover quite rapidly. But what we cannot expect is the economy to recover strongly and more than what it was doing before the outbreak, because the slowdown was already evident. As such, what we need to understand is that what we cannot expect is a V-shaped recovery like what happened in 2002, 2003 with the SARS infection that came from an economy that was growing strongly, very robust growth all over the world, and therefore resumed very quickly, and very low levels of debt globally, in an environment in which China was about 4% of global GDP, to now where China is about 17% of global GDP, and the world economy is excessively indebted. Productivity growth is very poor, and the growth slowdown was also evident before. What we also need to be aware is that we are going to read a lot about magical solutions, very quick solutions. Central banks are going to address the epidemic rapidly. Central banks don't create vaccines. So what are they going to do? They're going to increase liquidity, lower interest rates, more. So what that means is that they're going to do exactly what they have been doing so far. So we cannot expect a big recovery, and more importantly, a robust recovery, simply by doing the same as what they are doing as we speak. Second, governments are taking on to themselves the idea of delivering the level of growth that might be lost because of the epidemic and supply chain disruptions. Therefore, white elephants and big construction projects, big infrastructure projects, big government spending plans. Again, let's be extremely cautious about that. Extremely cautious because we also have the impact in that what we have seen in history is that once those happens, economies become less dynamic, more indebted, and the level of growth that they're supposed to achieve, the level of fiscal multiplier is very, very poor. So let's not expect big solutions, or let's not expect big results from doing exactly the same as global leaders and global economies have been doing in the last 15 years. The other thing that we need to be aware of is that a prolonged impact is going to also deliver what we are already unfortunately starting to see is a rise in protectionism, a rise in measures to try to contain everything via intervention. This is not good for the global economy. It hurts imports, it hurts exports, and it also hurts the global supply chains. In that environment, what we need to think of is, well, we have seen estimates of global GDP growth impact. They range from $570 billion to $1 trillion in different estimates. That we have also seen estimates of global oil demand reductions, about 1 million barrels a day, according to S&P and Platts. And with all of those things, what we can at least say is, one, that those estimates are not being aggressive, are not being alarmist, are not being excessive. They are actually quite prudent. Second is that even with those estimates, the reality is that it's extremely difficult that the global economy enters into a massive crisis and a widespread prolonged recession. I think that is one of the things that we need to at least be aware of. So we cannot fall into the trap of excessive caution or at least massive pessimism, and we cannot fall into the trap of excessive optimism. The reality of history shows that these outbreaks tend to be contained quickly. Mortality rate is very low. The mortality rate, particularly in the age segments of less than 70 years old, is extremely low. And the global network of healthcare and scientific research and sharing of data, all of that is already working on a solution. But that does not mean that we cannot get into big problems in the economy if what governments decide to do is to put massive levels of protectionist measures and interventionist measures that are going to delay the recovery once it happens. No? In the case of China, we need to be aware as well that we cannot expect a country that has shut down 21 provinces and cities that account for almost 80% of the GDP of a country and 90% of its exports to not have an impact on raw material and commodity suppliers, on governments and countries that produce goods and services that are sold in China, but also that need input or any of the goods and services that they import from China. As such, what we can be aware of is that the reality is it is likely to be something that gets contained reasonably quickly, but at the same time it is something that is not going to recover the economy as rapidly as we saw in previous outbreaks, because the slowdown of the Chinese and global economy were already evident before because of the excess of demand side policies. So let's not fall into the trap of believing in excessively optimistic solutions and quick solutions just because markets react rapidly, and let's not also fall into the trap of excessive optimism moved then into excessive pessimism, which is to think that this is going to be all a disaster because the Dow Jones index has fallen 2.5% or 5% or whatever it is. The likelihood of delivering the inflation expectations that central banks have is very low. The likelihood of global growth estimates to be the ones that we had at the end of last year is very low, but the likelihood of entering into a collapse of the global economy is also extremely low. Thank you very much.